Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current topics, artificial intelligence, earnings season, CPI, PPI data, what to expect in the market next, where to park your money, which strategies work, which strategies do not work. And my goal is to answer any questions you might have about your existing subscription or if you're looking for a new subscription. This is my brief bio. For those of you who are new, thank you for joining. Welcome. Do me a favor, type in first. Always want to welcome new subscribers. If you're first, if you're coming back, thank you. I really appreciate your time. Thank you for participating. Always want to welcome everyone. For those of you who are new, this is my brief bio. My background is a little bit different from most kind of newsletters or technology companies out there. I'm not an ex-trader who was trading on CBOE floor exchange. My background is technology, right? I have a master's degree in computer science. I wrote my thesis 20 years ago, 25 years ago on artificial intelligence. There was artificial intelligence even 25 years ago, and that's kind of my background and my passion is building models, building financial models, neural networks, predictive analytics to help me and subscribers trade and navigate current market conditions. I'm a big believer in artificial intelligence. I think they can give you good analysis of trends, support and resistance. You still need to navigate the market, right? They're not 100% accurate because it's still a random system, unlike generative AI, where you analyze in language and you can write a poem. I mean, there's no right or wrong. Some poems are great, some poems are not so great. You know, stock market is a little bit different, right? There is element of science and art, and you need both, right? You need both. And neural networks give you the science part of it. Art, that's, I think, a little bit human touch for that. That's why I'm also not a big proponent of robo investing, right? There's a lot of robo investing, kind of black box. You know, I'm not a big in day trading. I mean, if you have some kind of alpha edge and you're a hedge fund, obviously black box trading does work. You still need humans to kind of make decision, set up parameters, but it can give you an edge. But for retail investor, where you don't have, you're not scalping, or you're not rebalancing and finding some dislocations, black box, it's difficult. You need both science and art. So that's my background. So I'm glad you guys are here. Disclosure, but I've been, some of the companies that I worked for and I invested went public, and I kind of quickly realized that, I can do better managing my own money. That's what I've been doing for over, since I was middle 20s. So for more than 20 years, I've been managing my own money. Disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to visit optionscreening.com so you understand the risk associated with trading stock and options. And again, I'm not a financial advisor. I'm not managing others people's money. I'm here to show you what I do with my own money for educational purposes only. It should not be assumed that the future trade picks will be profitable, and please consult your financial advisor. All right. Prior to making any trading decisions. So before we get into a trading plan, let's talk about current market. So there are two most important news this week. I know some of you already been here in the morning, so I'm going to repeat myself. Most of you are not in live trading room, so I apologize, Mark, if I'm repeating myself. But most important price action you've seen this week in the currency market and in the treasury market. I still believe that currency market and treasury market will dictate where the equity market will go. There are exceptions, right? Like Nvidia, they hit a home run. They using generative AI, so they triple in value. Yes, there are exceptions like AI or weight loss, like LA Lilly, or electrical vehicles, right? Like Plug is up today, or Rivian. So there are exceptions, there are few, but there are exceptions. But for the most part, equity market is driven by yield, bond market, and currency market, right? Trillions of dollars. So that's what pushes the market. So the yield on the unemployment data and ADP data, we had a strong rally in the yield, accompanied by the market rally, right? With the idea that unemployment is low, we are creating 500,000 jobs, Fed is going to stay restrictive, higher for longer, and rates are up. This week, the opposite effect. CPI, PPI data, inflation is coming down. It could be because demand is slowing down, or it could be just, because the inflation is down and interest rates are down. Technology continues to make new highs and spiders continues to make new highs. So that's the disconnect, right? Since March, when we had regional banks, failure in regional banks, rates dropped significantly because everybody's concerned about recession, and market dropped significantly. Then in April, May, bond interest rates stabilized. You had NVIDIA earnings, ChatGPT come out, and then rates are up, and it's pushing the market up, 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 and now big significant drop, right? So I think the top is set. Now the question is, will the interest continue going higher because the Fed will come out and be more restrictive, more hawkish? Then the rates will reverse and continue going higher, or they will kind of maintain the same tone. And I think, if rates are down, then I think technology and spiders are going to have a hard time pushing the market higher. So that's one observation. So rates dropping, it could be interpreted in both ways. I'm going to interpret it that that's a sign of a concern, right? Until Fed at least says that they are pausing, right? Drop in rates mean it's a similar reaction that we had in March, right? Kind of disinflation, some regional issues. That's the price reaction in the interest rates. Dollar is the opposite, right? So this has to be reconciled again because the inflation in Europe and Britain is continue to go higher, much higher. They're more restrictive. They're raising interest rates. In the United States, inflation drops, so everybody expects that Fed will then, pause sooner than later and start lowering rates. So you do have pretty sharp drop in the dollar, and also the idea that the recession can be avoided and also contributing to drop in the dollar. Pretty significant. We took out the 52-week low. That is very bullish for the market. There is a little disconnect again with value, right? Why is dollar drop precipitously and value stocks are pulling back, right? Because the main beneficiary of a weaker dollar are cyclicals, right? Your banks, your transportation, your industrial names, Caterpillar, JP Morgan, some of the materials that we've been trading. So that's also a disconnect, right? Market is still digesting CPI, PPI data and trying to figure out, is it because the demand is down or is it because there is a disinflationary forces and will not destroy the demand? So for now, same thing, right? It's either the dollar is going to reverse and continue going higher, and this is a false breakout, and then the value will continue to drop, or vice versa. Dollar will continue to drop and value will continue to rally, right? We had a strong rally in value together with the regional, with the AI stocks since, end of May, started participating end of May. Technologies started participating in beginning of May. So that's something to also reconcile in the next few weeks as earnings unfold, right? The other driving force are earnings. So far, earnings have been great, right? Delta Airline came out, hit a home run, right? Best earnings ever, raising their guidelines. Everybody's traveling in Europe, in the United States, first class tickets are sky high. You can't really say anything negative about the earnings, except that, Delta Airlines since May, almost doubled, right? Almost went from 30 to 50, right? 75, 80% rally. So not enough, right? It was not enough catalyst to drive Delta Airline higher, and you have day one, big reversal, day two, continuation, not a good price pattern, right? So the question is, will there be more like Delta Airlines? If you missed earnings like Progressive and you have a high multiple, then it's a pretty sharp pullback from $134 to all the way to $112. So if you have a high multiple and you have anything negative to say, you have a sharp pullback in the prices. If you have higher multiple and you have great earnings, no, not so Delta Airlines, you still have a pullback, right? Today we have strong earnings from Citigroup, from JP Morgan, from Wells Fargo. Initial reaction, all stocks were high. And then again, similar to Delta Airline, they're reversing to the downside, right? So you can see that these are signs of exhaustion. 1 day doesn't set the trend, 2 days doesn't set the trend, 3-4 days do set the trend. So next week, if we see industrials, technology stocks announcing earnings, you have a similar reaction where if any miss, you have a sharp sell-off and home runs are met with mute action, then it would be a problem, right? And same thing, UNH, right? UNH is a confirmation. The stock got punished in healthcare, probably mainly also coinciding with end of April because money are moving from healthcare, healthcare, which was a darling of last year and up until March, and then they're moving into technology, right? Or industrials. Now it looks like the trade might be reversed, right? So UNH had a decent earnings, nothing spectacular, but because it's so oversold, it held the 52-week low, and now you have a strong rally, right? So that could be that's an indication of rotation and also signs of exhaustion in some of the places in the market. And again, Wells Fargo turning negative, Citigroup is turning negative, JP Morgan give up most of its gains. And XLF in general is turning negative, right? XLF reversed, ARC Innovation reversed, and most of the sectors right now reversed except maybe technology and semiconductors, right? You have pretty sharp drop in telecommunication, transportation, small caps, utilities, energy, metals and miners and home builders. So that's something to be reconciled, right? Why is the dollar weak and cyclical also weak? That correlation doesn't last too long. Either the dollar is going to make a strong move to the upside, or value stocks are going to continue to roll over. So that's my observation. In terms of next move in the market, the most important, first of all, the goal. What are the goals for any trader? My goal to be a disciplined and confident trader. Trade with confidence, trade with discipline. How do you do this? Even after 20 years of trading, the only success that I found is controlling the position size, number of position size. In my opinion, even if you have 20 years of trading experience, right? If you have fear of missing out and you have either too many positions or your position size is incorrect, it doesn't matter how many years of experience you're going to have. When you end up on the wrong side of the trade, right? If your bullish market sells off or your bearish market rallies, you will capitulate eventually, right? You capitulate, you stop trading, you trade based on emotion. So the only key to success is very simple: controlling the number of position size. It's a little different for everybody. It depends on your risk tolerance level, depends on your personality, depends on, did you just start trading or, so it varies, right? In the beginning, usually I get a response, Vlad, don't think about negative, concentrate on positive, right? And I'm looking for home runs, right? I want to double my money every week. I want to, 10 baggers. That's usually an indication that you just start trading, right? You probably traded maybe for a few months, maybe for a few years, but you're still in the beginning of your journey, right? At some point, you will realize hitting home runs every time is just as successful as if you're actually playing real sport, right? There's not a lot of softball players or baseball players, right? Not a lot of baseball players that can hit a home run every time they hit, right? They could be superstars and get a lot of money, they'll hit them, but still, those are exceptions. Stock market is no different. So to become disciplined, confident trader, it's all about number of position size. I encourage you, if you're in the beginning of your journey, and you don't feel, self-awareness is important. Like, ask yourself a question: am I a disciplined, confident trader? If the answer is yes, okay, you can adjust. You can have more positions. You can adjust your position size. If the answer is no or not sure, I encourage you to keep 4 positions, right? This is question to yourself, right? Be honest with yourself. Just have 4 positions, no more than 2.5% loss per position. And you can see this basically on all of our tools, right? Stock Forecast Toolbox is one of our AI network. I use it all the time. It basically says 450, market a little bit ahead of itself, right? We were at 452, right? So at 452, 450, it doesn't make sense to chase the market. If we drop to 444, 445, okay, you're still bullish on the market, this is the time to buy. But it's a 1% difference, right? 1%, if you constantly overpaying 1% when you enter or when you exit the position, that adds up, right? So that encourages you to be patient and wait for support and resistance levels. And AI does a great job identifying, right? Model grade B. Most of the time, if you don't have CPI print, if you don't, even like today on earnings, right? You could argue that earnings could have pushed, but unless there is some kind of a jump in volatility in VIX, the model is doing a good job telling you what is the current trend, neutral, and that 450 you're overpaying, 445 is a good time to consider entering, right? If you're short-term aggressive trader, or if you want to, or you're just in general bullish. So that's the model, right? Positive, negative. So position size is very important because, again, to become a disciplined trader, right? This whole speech is about disciplined trader, confident trader. So most people are bullish right now in the market, right? It's very hard to argue, bears are slowly capitulating and giving up their positions, right? Even someone like me now I'm questioning, does it make sense to stay bearish? Maybe market neutral is the better strategy, So most people are bullish, rightfully so, right? We have drop in CPI, PPI data. We have, low unemployment, and everybody's traveling. Cruise lines are, packed, right? Some kind of funny prices to participate in Carnival Cruise or the Royal Caribbean. So people are definitely spending money on leisure and transportation and traveling. So you're bullish, right? So then the question is, how many shares can I buy, right? Let's say you want to buy at 450 because you think that, earnings are not as bad as everybody anticipated, and we're going to continue going higher. So I propose, again, day trading 444, right? This is your first support for short-term trading, right? So this is definitely support number 1. For day trading for a couple of days, bulls decisively broke again above 444. As long as we are above 444, there's no reason to assume that we're going to go lower, right? And overhead resistance is 450, kind of psychological level. After that, it's 460, right? Right away, it'll open up the door to 460, right? So there's 2 things will happen. Better than expected earnings, we're going to go up 20 points. From 450 to 460, 470. If earnings do not justify the recent rally, then we're going to quickly drop to 430, right? And that's your support number 2, right? So 30 points. So I would encourage you, when you determine size, let's say you want to go long right now. If you're day trader, 1% stop loss, right, to 444. If your position is longer than 430, right, 450, 430, that's about 5%. So that's, and I would not risk more than 2.5% per position, right? So on average, we have $10,000 portfolio. $2.5% is $250, right? So that's the calculation. So I'm willing to risk $250 per position. So if I'm day trading and I'm looking for $4 stop, okay, I can buy 60 shares. If I'm holding position for a couple of weeks, I would use 430, right? $20. So then 20 points, maybe you can buy 10 shares. Give me 1 second, sorry, I need to, 1 second. Just give me 1 second. About that. All right. Okay. So that's how you would determine position size. So in the beginning, I would always encourage you to make this a priority, right? To keep a journal and write down position size. Ask yourself why you entering the trade, right? Is it a fear of missing out because the train is leaving, right? Or do you actually see some kind of a setup that makes sense to be long? So that would be my, I would concentrate on the position size, right? That's the most important. Average account, $10,000, $250. So, and then that's how you determine shares. So positive, negative scenario are extremely important, right? So let's just quickly go through. So let's say right now, it looks like we broke about 450. You think the market is going higher, right? I would do maybe at least for now 5%. How many of you think we're gonna hit 430, right, in the next, couple of weeks? Or that's minus 20 points? How many of you think we're gonna go up 20 points to 470? Right, so scenario one, bull market continues, generative AI, every week. I think today somebody else announced, I think Shopify said that now they have generative AI for entrepreneurs plugin, stock is up 10%. Nobody cares, what the revenue implications are, but it sounds really good, cool. So, bull market continues. CPI data is down, PPI data is down. We talked about unemployment data, really good. There's no signs of recession. Then up 20 points. Two, maybe evaluations are too high and earnings don't justify the rally. Maybe the signs of recession reappear and we're down 20 points, scenario two. So how many of you say scenario number one? How many of you say scenario number two? One or two? Mark, one. Joseph, two. Anyone else? One, two. Earnings will continue to be okay to good. Ricardo, one. Okay. So I think most of you said one. I think there's only one or two people. So most of you said we'll continue going higher, right? One. I'm still being stubborn, right? I'm going to say two, right? And my main reason is just to look at the dollar, right? I don't even think earnings are going to make a big difference, right? You can see today the price action of Delta Airline, Wells Fargo, and JP Morgan. They're, exhaustive at the best, right? At best description, despite stronger earnings. So earnings is not going to matter that much. I think what's going to matter more are, again, interest rates and the dollar. So if the dollar continues to sell off, I will say one, right? If this is a false breakout and we have a rally next week in the dollar, then I would go with two, right? And we already start seeing that value is underperforming, right? That doesn't make sense. So we'll see. I mean, we have regional banks, right? So small caps and regional banks are gonna announce next week, and I think that will give more clarity into 1 or 2. For now, I'm going to put 2. All right. How do we help you? 1 or 2, can you make money if the market goes 1 and 2? Yes. So we'll just look at today's today's orders and positions. So we do have a lead circle. This is a subscription where you have access to all of our data, right? Analytical tools and also real-time portfolio. So I encourage you to try it out, right? We have monthly subscription, annual, lifetime subscription. Open up a ticket, click on chat now, open up a ticket, and we'll help you decide, what makes sense. Or you can call our number. We also have a product specialist available you can call. But this is the platform, a service where you can actually see all of my trades real time, right? You can enter your phone number and receive a text message, or you can just go to the trader log and see all of my orders position. Complete transparency, every trade gets recorded in performance, so you see all of the trades. So Wells Fargo, I did do Iron Condor yesterday, right? I did Delta Airline and I did Wells Fargo earnings strategy. This is, I'm neutral. When you do Iron Condor, you basically say Delta Airline, Wells Fargo went too far, too fast. On the other side, they're still delivering good earnings and they're not gonna fall off the earth. So market neutral strategy, like Iron Condor. Wells Fargo, Delta Airline, in both cases are collected about 0.5%. Sometimes it's 30 basis points, sometimes it's 0.5%, 50 basis points. In this example, I collected 22 cents on the $42 stock. So 0.5%, again, another main concept is compounding investment. A lot of people say, Vlad, what's the 0.5%? I invested $100, I make $50. Sorry, I invest $1,000, I made $50. 0.5%. No, 0.5% is 100. I invested $100. 1% would be right. 0.5%. I'm losing my mind. All right. I invested $100. I made 50 cents. 50 cents. What's 50 cents? Or if I make $100, that would be 0.5% would be $2,000. Right? I invested $2,000. 1% would be $100. Yeah, 0.5% would be $100 doesn't make any difference in my 0.5% doesn't make. It might not make a difference for one trade, but if you consistently making even 0.5% a week, right? You do, let's say, 3 or 4 of these trades, 1 will go against you, 3 will go in your favor, right? That's usually the ratio. You can make 0.5% a week. That compounds, right? Over 52 weeks with compounding investment, it's going to be 30-35% return. Without compounding, obviously 26%, 52 weeks. So that compounding investment is extremely important concept in trading, because initially when you start trading, you don't want to wait, 52 weeks. You want to make 26% today, or by Friday at least. But that's not the service. Here there are other services that try to do that. Our service is kind of try to make 0.5%, 1% a week, and then over a long period of time it compounds, and you can make returns. So that's Wells Fargo. There are put spreads and call spreads, so I do trade spreads, kind of directional spreads like carry, right? I believe that regional banks are not going to have a great earnings, so I did buy a put spread for $2.40, right? So you do have put spread. Dollar sold off significantly, silver rallied significantly. I closed silver position, right? And I trimmed TLT. So some of these are stocks, some of these are ETFs, some of these options. I try to do both because we have subscribers that either do both or one or the other, right? I don't want to have this misconception that I only do option trades or I only do stock trades. In theory, options is a derivative of stocks. It's a substitution. That is the way I treat it. So you have a choice. You can always trade stock. If I trade KRE, you can short KRE, right? You can short KRE stock. It will be the same strategy. I mean, there's different profile, risk reward profile, right? But the strategy is the same. You express in your bearishness on regional banks going into the earnings. So So these are the type of trades, right? You can see all of my positions, you can see orders, you can get SMS message. I encourage you to participate live, right? Because there are a lot of signals. Notice I will never put quantity here, right? Because I know if I put quantity, right? First of all, it could be construed as an advice. Second one, I don't know how many, what your risk tolerance level is, right? If I put 100 of Wells Fargo, that's $4,600, and you only have $4,600. Well, that might be inappropriate for your account. If you have $25,000, maybe 100 shares is too small, right? So determining position size is something you have to learn. And the only way to learn it is to participate in live trading room, right? Morning bell, closing bell. Or if you're busy, you can look at the recordings. So I encourage you to, if you haven't done that, to view live trading room recordings, whether you have subscription or you do not. I think that's the best way to participate. We do have a YouTube channel if you want to participate for free for now. Wednesday, every Wednesday, we do have live trading room. I do this intentionally to make sure you're comfortable with the strategy, you understand overall, high level plan and the strategy, and then you can sign up, right? So Wednesday, if you haven't signed up, please click on subscribe. That would be great if you can participate. Any other questions? All right, so that's Elite. I briefly went over stock forecast toolbox, right? We have 10-day, we have 6 months predictions. Same neural network, we just analyze a different data set. Obviously, bulls are in control, strong uptrend. Model says 450, it's probably overbought. And you can see, at least for now, market is losing momentum around 450. 426 would be a better buy, right? If we drop 5%, 426, 430, that's line in the sand, then you can consider going long and buy. Any questions on the stock forecast toolbox? Again, support, resistance, and the trend, right? For trader, you need to know, longer term trader, you need to know 450, you're probably overpaying. 426 is a good buy, and the trend is positive, right? And you can analyze any stocks or ETFs. We do have different pick services like Active Trader, Weekly Trader, and etc. That basically shows you which stocks are in uptrend. Caterpillar, right? That's been in strong uptrend. Alphabet, Visa. Looks like they're all rolling over, right? Because I think stock market is losing momentum. But at 250, if we reach 250, right, pre-market, if you see the market is down, this is an entry point, right? 255 or 250. And you can make a decision. If you see weakness, maybe you wait for 250, and if you're still bullish on the market, that's when you buy. 1% target gain, 1% stop loss. I encourage you to split the trades into two entry points. And if you do get stop out, again, if it's a day trading, less than 1% of your portfolio on $25,000 account. If you hold in position for a couple of days, couple of weeks, 2.5%. And again, split it into two trades. That means you're risking 1% at a time, right? If you do entry 1, you're risking 1%. If you do entry 2, you're risking 1%. So that's Active Trader, right? You can use stocks or options. If you're more comfortable trading options, you can click on Options tab, and same entry point, it using stock forecast toolbox or previous close to derive these prices, and it will suggest what the option substitution. Again, if you buy 100 shares of Caterpillar, one contract, that's $24,000. Majority of the traders might not be able to afford that, right? Then, or maybe you do a spread, right? Or maybe you stick with Google because it's half the price, right? One contract of Caterpillar, one contract of Google, assuming same beta, you have twice as much exposure to Caterpillar than Google, right? You're not balanced, right? You want to have a balanced portfolio, diversified portfolio with equal exposures. So that's Active Trader. Same analogy for Weekly Trader, Monthly Trader. Just different models, different time period, but the same strategy. The holding time usually is different. So those are your pick services. If you don't need the tools like Stock Forecast Toolbox or picks, we do have Spread Trader and Shadow Trader. If you're only interested with spreads, you have Premium or Spread. If you just want to follow my trades, Shadow, right? If you don't need any of these tools, then Shadow. So that's in essence kind of we either have picks and tools, right? Stock forecast toolbox or picks, or we have just follow my trades, or you have combination of both. A lot of it depends on your experience, right? If you're an experienced trader, you might not care when I buy Caterpillar or Google, right? You have your own decisions. You know how to do this. Then you just follow tool services and pick services. If you're not sure, if you're not confident, you need help with the trading plan, you need help with position size, okay, then these are your live portfolios. Stock only, robo-investor, or elite, where you have a little bit of everything. Any questions so far? So Chuck, on the Profit Accelerator, I only use stocks. So Profit Accelerator or similar Active Trader or Robo-Investor, supposedly only stocks. If you want to do substitutions, probably either call or call spread, right? In the Profit Accelerator, it's only bullish. Robo-Investor, it's only, going long. I don't go short. So when you go long, you can either buy a call or buy a call spread. If you don't want to buy stocks, buy a call and call spread. But again, pay attention to your portfolio size and the strike price, right? Because if the one idea is Caterpillar, another idea is Google, you might not be able to afford 100 shares of Caterpillar. So then I would say instead of buying one contract, buy shares, right? Look at your stop loss, right? Let's say Caterpillar stop loss 248, right? So 248, $5, right? That's 2%, right? If you want to hold this for a couple of days or a couple of weeks, probably I would say 250 is your stop level. 248 is your stop level. So $5, $250, you can buy 50 shares. So you cannot afford one contract, right? Because Caterpillar can pull back quickly after the earnings or other industrial earnings roll over. That would be your strategy, right? So instead of buying one contract, you buy 50 shares. So pay attention to strike price. That's the most common mistakes new traders make, right? They buy one contract of Caterpillar, one contract of Google. Let's say they both trade at $5 and they think that they have the same exposure. In reality, they do not, because 1% drop in Caterpillar is, $2.50. 1% drop in Google is $1.20, right? So completely different exposures. Any other questions? All right, so we went over services, we went over tools, YouTube channel. It's been 35 minutes. Any other questions? We do have research tab, right? You can look at the probability calculator for spiders or seasonal chart. Not sure it's loading. I have to look at it. Not sure it's not loading. Oh no, here we go. All right, so you have seasonal charts like for, usually you do have rally in July, right, and then kind of pull back toward September, October. We'll see if that correlation stays. Right now it's 54. It dropped. Probability calculator not loading, so I have to research. And why it's not loading? Okay. All right. Any questions? All right. If there are no other questions, let's see. All right, any other questions? Meanwhile, let's see. So spiders looks like close to session high. We were at 449. Citigroup still negative. JP Morgan now turning negative. Wells Fargo fluctuating between negative and positive. UNH holding on to most of its gains. Pretty big drop in Delta Airline, right? So Delta Airline continues its descent. Regional banks continue to pull back. That's about, I mean, banks are rolling over slowly. The other stocks are weak. Technology is still strong at session high. So it looks like in cyclicals, we do start seeing rollover retail, small cap stocks. China, metals and miners. All right, any questions? I'll stick around for another minute or so, see if you have any questions. Check Google for the next 30 days. So I would use so very strong trend in Google. It does show 119 to be support 129. So to the upside, you have $4 more for this month. To the downside, you have about $5 or $6. So it does show you next 30 days, probably we're in the middle of the range, right? It's a flip of a coin. We can go to 129 or 120. If you do 10-day forecast, it's more neutral. Wait, 10 days and 6 months are the same? No, sorry, 6 months. So 6 months, 129, 120, 10 days, 125, 120. So on 10 days, it's a little bit overbought, right? At 125, I would not buy it. I would wait for 120. A lot of it obviously depends on earnings, right? A lot of it depends on earnings. It had a strong rally, continues to high, but it's facing a lot of overhead resistance, and it's earnings in the next 11 days. So it could rally into the earnings, right? It could continue make it marginal highs, but then it all depends on earnings, right? It could have a reaction like Delta Airline, where it's a home run, but it's rolling over. You know, I haven't seen any earnings yet where stock is, you know, year-to-date high and continues to break to the upside. I haven't seen that. UNH is up, but you know it got sold off significantly. All right, any other questions? Chuck, thank you about Google. Thank you. All right, guys, thank you very much. That's all I have for today. I will see you at the closing bell. Enjoy your time with friends and family. If you haven't signed up for YouTube, please sign up, click on subscribe. It helps us with marketing. It would be greatly appreciated, and consider joining Elite Circle. Thank you very much and have a great day.